Let's take a quick look around the country at what happened in property markets over the weekend. And nationally, there were 1,278 auctions, a clearance rate of just 49%. You get that? Across the country, 51% of homes were not sold. Now, in Sydney, there were 467 auctions. The clearance rate here, you can see 44.8%, but there were a further 1,194 properties sold privately. Melbourne had 351 auctions, a clearance rate here, 55.8%, and another 932 homes sold privately. Brisbane had 84 auctions, the clearance rate just 32.1%. And another 985 homes sold through private treaty. In Adelaide, 63 auctions, a clearance rate 68.3%, 222 homes sold privately. And in Canberra, 59 auctions, a clearance rate 62.7%, plus an extra 68 homes sold privately. To explain all that, joining me, Angus Moore, economist with REA Group. Angus, that tells the story. We're used to 80%, 90% auction clearance rates over the past 18 months or more. Now, back close to 50%. Is that reality, or is that simply people being spooked by higher interest rates?
Yeah, we're certainly seeing a slowdown in market conditions more broadly, and part of that's the fact that we're coming into winter. Auction markets are quieter in winter. People don't like listing in winter. It's colder. It's not as nice time to do an open home. That said, things are still quite busy for winter. We still had quite a high sales volume through much of last month. So things are slowing, but maybe not as much as we might normally expect for winter. But when we look at broader conditions, we have seen things like measures of buyer demand come off. It's taking longer to sell a home. Clearance rates are down. So we are seeing the impact of higher interest rates, and we're seeing that in prices as well.
OK, but the boom that we've been through was shown up in the census, in the national census. First home buyers, the number of homes built in Australia, which also comes to population growth and population migration throughout Australia.
Yeah, exactly. I mean, we're talking what I love if we're talking census, but one of the things that really stuck out in the most recent census, for me at least, was that we built a lot of homes in the past 5 years. You know, the census is a census of dwellings as well as of people, and over the 5 years between 2016 and 2021, number of occupied homes grew 12%. To put that in context, between 2006 and 2011, it was just 3%. Over that whole 5 years, just 3%. And 2011 to 2016 was only 7%. So we built more homes in the last 5 years than we did in the prior decade combined.
So, OK, so tell me this. The Reserve Bank raised interest rates 0.5%. That takes total interest rate rises 1.35% in the last 3 months. Given what is happening in the housing markets now, do you think the Reserve Bank might be a little satisfied with its rate movements so far and the way it's stopped activity in the housing markets?
It's certainly having an impact on housing markets. We're seeing that in prices. I'm sure we'll see it in building activity. We have data from the ABS coming out this week on building activity that I think will start to show some of that. And, you know, we are coming off a very rapid period of construction over the past 2 years in detached homes, partly driven by low interest rates, partly driven by home builder, and that's starting to come off now. So I think the RBA will be happy that what's happening in the housing market is having the desired effect. Of course, it's not the only channel that monetary policy matters through, and what will ultimately determine whether they're happy or not is whether inflation's getting back under 3%.
And that's the thing, because that will be perhaps the signal for them to cut interest rates or to hold interest rates for longer. You just wonder when they're going to start that moment of waiting and looking at the Australian economy.
Yeah, for sure. I think it'll be interesting to see. We'll have updated forecasts when the RBA meets next. Be interesting to see how those are looking, what they're thinking for unemployment, what they're thinking for inflation, because that'll really set the tone for what happens over the next 6 to 12 months with the RBA.
Angus Moore, always good to have you in the program, and many thanks for your time today.
Absolute pleasure, Ross.